Hey, good morning. Welcome to the morning brief. Today is July 18th, Tuesday. And you can see that we had some numbers at 8:30 today. We had the core retail sales month over month, which was less than expected, 0.2% versus 0.4%. Retail sales month over month, 0.5% expected, only 0.2%. So what is this saying? This is saying that demand is starting to go down. And the market really just can't decide whether that's a good thing or a bad thing. Normally, that would be a bad thing, but when you take into account the Federal Reserve, bad things mean the Federal Reserve may not hike rates, which is a good thing. So, really hard to interpret how these numbers are going to be impactful on the actual market. That being said, to me, this is saying, hey, the market's not doing the economy is not doing as good as you think it is, and the market has been overly aggressive to the upside. That's just my personal opinion, but I think that they're in denial, and there's a lot of bad things happening in the economy, and the Fed is behind the ball, and they're going to keep raising rates, even though there's lots of warning signs that the market is and the economy is slowing down. That being said, 9:15 we have industrial production month over month. That's a orange item, which is a medium impact. We have capacity utilization, same time. At 10 a.m. we have business inventories, FOMC member bar speaks, and the housing market index, all at 10 a.m. But those are all low impact items, and that's all we have for today. It would not surprise me if we were down today with the market slowly trying to realize that, hey, things are not as rosy as we thought they were. That being said, earnings is in full swing, and earnings have been good. All the earnings released today, I think, beat expectations. So earnings have been up. Doesn't mean, remember, the market's always looking 6 months ahead. So earnings might be good previously, but doesn't mean the earnings are going to be good in the future. Looking at the daily chart here, we continue to just sort of march up. That being said, this is also indicative of a top. Why do I say that? Because we've got a wick, a decent sized wick at the top. You'll find that wicks happen at tops and at bottoms. And so we've got, I wouldn't call that one a wick. It is a wick, but not a very big one. But this one and this one certainly are interesting, that we're getting some topping type action. Also, look at volume here. Volume was off yesterday. And when we go to the next slide, the next chart, we'll see some further evidence that may be suggesting we may be turning over. Where could we go? I think this red line up here could be the top side, which is 45.92. On the downside, I'm still thinking these highs, a couple of highs right in this general area, 44.96. So that would be within the range we've had over the last couple of days. Taking a look at the next chart, which is inventory. Inventory is showing that we had price improvement, but this is actually a negative. We actually had less, somewhere in the neighborhood of a minus. I think it was a minus 300. Minus 310, where we had. So this is actually divergence. This is going from zero down. Remember, you start every day at zero, going down to minus 310 while price is going up. So this may be the first sort of chink in the armor, where we're not correlated, where price continues to go up, but people are not, they're not adding contracts. They're not expanding the number of open contracts. They're actually contracting. And that is indicative of a divergence in what's going on. Price going up, inventory going down. Usually that's not a good sign when we have divergence like that. So another little clue that we may be topping out. Taking a look at the intraday for some support and resistance levels. We squeeze this down a little bit. Notice also, this has been happening recently, 56 to 46. It's only 10 points of overnight action. That's really a narrow range. So again, the action is compressing. There's not as much going on. Again, signaling that we could be topping out. Where do we have resistance? Well, we have resistance at 45.65, 45.68. So you can almost make that into one giant band. You go up a little bit higher, you go to 45.85, and I'm going to go to 4600-ish as an area of resistance. On the support side, we have support, good support, at 45.10. Of course, 4,500 will also be, but there's that 44.97 is also a good area. And then a little bit below that at 44.74, good support. So you can see there's 3 levels of support there. Stock Trader's Almanac today is 47.6. So we went from 33 yesterday and the market went up. So that obviously didn't work. But 47.6 today, still a negative expectancy from the Stock Trader's Almanac. That's all I've got for you today. Hope you have a great day. Remember to subscribe, comment, and like. Have a good one. See you tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.